This week, the AI story moved out of the chat window and into the physical world. Tesla beat delivery expectations, but investors still punished the stock. NVIDIA is pushing deeper into robotics and physical AI. Humanoid robots are moving toward factories before homes. SpaceX is preparing the next Starship steps. Apple is trying to make AI feel like part of the operating system. And brain-computer interfaces are quietly improving in the background. So the big question is not whether AI matters. The question is, who wins when AI leaves the screen and starts moving through cars, robots, rockets, phones, factories, and maybe even your brain? Welcome back to Future Signal. Let's break it down. Let's start with Tesla. Tesla's second quarter delivery report came in stronger than expected, with several outlets reporting 480,126 vehicle deliveries and 451,758 vehicles produced. That is a strong rebound. But the stock still fell. Investors Business Daily reported Tesla closed down 7.5% at $393.45 after the report. That reaction tells us something important. Tesla is no longer being judged like a normal car company. If Tesla were only an EV maker, a delivery beat would probably be the whole story. But the stock's bigger future depends on robotaxis, self-driving software, Optimus robots, energy storage, and the idea that Tesla can become an AI and robotics platform. So investors saw strong deliveries and still asked, what about autonomy? That is the Tesla split. The car business matters, margins matter, deliveries matter, but the biggest upside story is whether Tesla can turn its AI work into software, services, fleets, and robots. The optimistic view is that Tesla is building an AI company on top of a massive vehicle fleet. The cautious view is that the market is already pricing in a lot of success before robotaxis and humanoid robots have proven they can scale. Either way, Tesla is a clear example. AI is becoming physical. That leads directly to NVIDIA. NVIDIA is not trying to build every robot or every self-driving car, but it may still be one of the biggest winners if robotics becomes a real market. The company has been using the phrase physical AI to describe systems that understand and act in the real world. Robots, autonomous vehicles, warehouse machines, and simulation systems that train robots before they touch reality. This is very different from a chatbot. A chatbot can give a bad answer and annoy you. A robot that makes a bad decision can damage equipment or hurt someone. Physical AI needs perception, simulation, and edge hardware. That is where NVIDIA wants to sit. The company already dominates the AI chip conversation, but the next layer is the robotics stack around those chips. Simulation, synthetic training data, robot foundation models, and tools like Isaac and Omniverse. The key idea is simple. NVIDIA does not have to pick the winning robot company if it can sell the platform that many robot companies build on. That is the same playbook that made NVIDIA powerful in generative AI. Sell the shovels. Sell the platform. Robots are having a moment, but the home robot dream is still very hard. Homes are messy. Furniture moves. Kids leave objects on the floor. Pets run around. Lighting changes. Stairs, cables, and wet floors all create problems. That is why the gap between a great demo and a reliable home robot is still large. Factories are different. Factories are controlled. The lighting is consistent. The tasks repeat. And the business case is much clearer because labor and downtime have real financial value. So, factory robots may scale before home robots. For Tesla, Optimus may be most useful inside Tesla's own operations before it becomes a mass-market home assistant. The question for robot companies is whether it can do one useful job over and over. From an investing perspective, the winners may not only be the companies with the flashiest humanoid videos, they may be the companies selling actuators, sensors, batteries, machine vision, and robotics chips. The supply chain may be the business. Now let's move from robots on Earth to infrastructure in space. SpaceX has been preparing the next steps for Starship. That can sound like a narrow rocket update, but Starship is much bigger than one launch. Starship is central to SpaceX's plan for heavier payloads, more Starlink satellites, NASA lunar missions, in-space refueling, and eventually larger missions beyond Earth orbit. Launch cost changes everything. If Starship works at scale, SpaceX could change the economics of putting mass into orbit. That affects satellite internet, defense, Earth observation, and space manufacturing. SpaceX is not just a rocket company, it is an infrastructure company. Apple's AI story is different. Apple is not trying to win attention with the biggest chatbot benchmark. It is trying to make AI feel invisible. With Apple Intelligence and Siri, Apple wants AI to be context-aware and connected to what you already do. That matters because Apple owns the consumer layer. If Apple gets AI right, users may not think, I am using an AI model. They may just notice that their phone understands context better, organizes messages better, and turns language into action. This connects to the bigger interface race: phones, AI glasses, mixed reality, and even brain-computer interfaces. Meta's Brain 2 QWERTY research shows that non-invasive BCIs are improving. The future of AI is better ways to interact with machines. For investors, the main signal is that AI is not one simple trade anymore. The market is separating broad AI excitement from specific earnings power. Who has real customers? Who has pricing power? Who controls infrastructure? That is the next phase. Less about chat windows, more about deployment. Less about hype, more about infrastructure. AI is moving into cars, robots, rockets, phones, and factories. That is the signal this week. If you enjoyed this breakdown, hit like, subscribe to Future Signal, and drop a comment with the company you think matters most to the physical AI race. We will be tracking this every week. Thanks for watching, and I will see you in the next one.